Today, we're going to talk about getting pre-qualified for a home loan. How do you achieve your home loan goals with confidence? With Rocket Mortgage, I can help you find the right home loan solutions to fit your needs. Today, we're dealing with an ever-changing, economy, as well as interest rates, as well as we're in a seller's market, as well as in a competitive buyer's market. My name is Marshawn Govan. I am a loan originator with Rocket Mortgage. My NLMS ID number is 1370676. Today, we're going to discuss a few first-time home buyers program and to find out how much house you can borrow before you start looking and how you can make the strongest offer possible on the property you choose and what document you should have ready when contacting a loan officer. When initially contacting a loan officer, you may want to have, this list of documents and information available to help answer questions that they will ask you. Pay stubs for the last 30 days, bank statements for the last 3 months, 2 years of employment history, and previous tax returns for 2 years. If you have all those things, then you can get pre-qualified for a mortgage loan by clicking on the link below. Also, there's also a special program offered by CalHFA Finance Agency, and there's also a quick link that says, "Am I eligible?" This helps with the first-time home buyers assistance, anywhere from 3.5% to up to 10%. You can click on that link as well to learn more about the California Housing Finance Agency. There's also a FICO requirement with the California Housing Finance Agency, which is a 660. But you also want to select your credit score, or at least inform your loan officer where you're at with your credit. So that would help them be able to, set the right goals and plan accordingly. But if you have a credit score between 300 and 579, that's a very poor credit score. It will be very challenging for you to qualify for a home. So we're going to talk about the fair and the good is where, that's where people want to fall in at if they're looking to buy a home or considering, any one of the first-time home buyers programs. But for a fair credit score, that ranges from 580 to 669. You also have good from 670 to 739, very good from 740 to 799. But a lot of these programs, if you have that credit score above a 680, then most likely you're not going to qualify, for those first-time home buyer programs that is offered to help you with the down payment assistance. An exceptional credit score is 800 to 850. Now, sometimes, people are credit challenged and have things they have to work on. I'm not a credit expert. I'm not a credit expert or credit specialist, but, when my clients are, having to improve their credit score, there is some tips and also some best advice that can be given on how they can, improve their credit score. One is paying their bills on time. 2, you want to keep your utilization with your credit cards under 30%. 3, you also want to look for inaccuracies and try to pay off any negative or collection accounts. And 4, you also want to, open up some credit cards and make sure, you're being managing those credit, managing those, that debt responsibly. But an FHA loan requirements, the importance of an FHA loan, the important FHA guidelines for borrowers. What is who is FHA and what is FHA? FHA is the Federal Housing Administration. They provide mortgage insurance on loans made by FHA approved lenders. FHA insures these loans on a single family and multifamily homes in the United States and its territories. It is the largest insurer of residential mortgages in the world, insuring tens of millions of properties since 1934 when it was created. So when a lender decides to, provide a home loan, and then what the FHA does is they insure those loans anywhere, between 80% and above. And so the lender is only taking a risk of 20% in an event that you default and you have to foreclose on the property. So a FICO score of at least 580 is going to equal a 3.5% down payment. A FICO score between 500 and 579 is going to equal a 10% down payment, as well as mortgage insurance premiums is required when you put down less than 20%. You know, the debt to income for an FHA loan has to be below 43%. You know, also the home has to be your primary residence, and the borrower, you have to have a steady income and proof of employment. There's also first mortgage programs. Here, we're still building out our landing page where you would choose a loan type. CalFHA offers 6 different types of loans. The first loan is the CalFHA FHA Loan Program. The CalFHA FHA program is an FHA insured loan featuring a CalFHA 30-year fixed interest rate first mortgage. Government and conventional income limits for the Fresno County is $159,000. The second loan program is the Cal Plus FHA Loan Program. The Cal Plus FHA program is an FHA insured first mortgage with a slightly higher 30-year fixed interest rate than our standard FHA program, and is combined with the CalFHA Zero Interest Program, ZIP for short, for closing costs. The third program is a CalFHA VA Loan Program. The CalFHA VA program is a VA insured loan featuring a CalFHA fixed interest rate first mortgage. This loan is a 30-year fixed interest rate first mortgage. The fourth is a CalFHA USDA program. The CalFHA USDA program is a USDA guaranteed first mortgage loan program, which can be combined with the My Home Assistance Program, or My Home for short. This loan is a 30-year fixed interest rate first mortgage. The fifth is the conventional loans. CalFHA Conventional Loan Program. The CalFHA Conventional Loan Program is the first mortgage loan insured through private mortgage insurance on the conventional market. The interest rate on the CalFHA Conventional is fixed throughout the 30-year term. The sixth program is the Cal Plus Conventional Loan Program. The Cal Plus Conventional Loan Program is a conventional first mortgage with a slightly higher 30-year fixed interest rate than our standard conventional program, and is combined with the CalFHA Zero Interest Program, ZIP, ZIP for closing costs. Here you can choose the DPA type, which is the down payment assistance or the closing cost assistance. There's 2 programs that is offered by CalFHA. One is a 2% and one is also a 0%. The down payment assistance programs, the money you put down or the down payment on your home loan can be one of the largest hurdles for many first-time homeowners. You know, that's why CalFHA offers several options for down payment and closing cost assistance. This type of assistance is often called a second or subordinate loan. CalFHA subordinate loans are silent seconds, meaning payments on the loans are deferred, so you do not have to make payments on this assistance until your home is sold, refinanced, or paid in full. This helps to keep your monthly mortgage payments affordable. My Home Assistance Program, CalFHA government loans. FHA My Home offers a deferred payment junior loan of an amount up to the lesser of 3.5% of the purchase price or appraised value to assist with down payment and or closing costs. CalFHA Conventional Loans. My Home offers a deferred payment junior loan of an amount up to the lesser of 3% of the purchase price or appraised value to assist with down payment and or closing costs. Forgivable Equity Builder Loan. This has been a lot of things going on in the news talking about this program, because what it does is it offers up to 10% in a forgivable loan for the down payment on a home. So with this, you know, home equity has proven to be one of the strongest ways for families to build and pass on intergenerational wealth. And CalFHA is committed to improving equitable access to home ownership for all Californians. Now, no program is perfect. And I think, every program has to, continue to be updated and improved, for greater access and greater affordability, in my opinion. There's some drawbacks with this program, and we'll get into that details shortly. The Forgivable Equity Builder Loan gives first-time home buyers a head start on this with immediate equity in their home via a loan that is forgivable if the borrower continuously occupies a home as their primary residence for 5 years. So, for example, if you were able to get $50,000 in down payment assistance and you lived in the home for 5 years, each year you would it would be reduced by $10,000 a year. What you would do is what you would get is a 1099, and that would become taxable income that you would have to report on your taxes. And after 5 years, then you're not required to pay this loan back unless, you sold, refinanced, or did some other things. The other caveat, the other requirement is that you have to use Fannie Mae Area Median Income Lookup tool, or the AMI. So this is where I was saying that the program still has to, has some changes being made to it, because it should be 100% and not based off of 80% AMI. And so I've also added a link here for you to be able to look up the AMI by your county. So what you would do is you would take 80% of the AMI in your county, and you would divide, that income limit by 12, which is for, 12 months in a year. Then you would calculate the DTI, which is your debt to income, which cannot exceed 45% of the AMI income limits. So this is where, a lot of people would not qualify. Only the people that would have a certain income bracket. For example, in the Fresno area, the AMI is 50,240. You would divide that by 12, which gives you a monthly average income of $4,187. Then you would multiply that by 45%, or 0.45, which gives you a monthly monthly income of $1,884.15. This also has to include interest, principal, property tax, and PMI. So when they were designing this program, I don't think they took that into consideration, because a lot of people in the Fresno area, or even in any area in California, is going to be priced out of the market, trying to go and get a $250,000 loan, and then trying to keep their mortgage payments, within, the AMI limit, which is, it's almost unattainable for a lot of people. This determines the borrower's capacity, ability to make interest and principal repayments on a loan using his or her disposable income or cash flow. Now, these are 30-year conforming loans, or 30-year fixed, an interest rate, for hypothetical purposes, an interest rate of 5.625%, 5.89 APR is for the cost of 1.875 points, which is $4,687.59 paid at closing. So that's going to be your cash to close on a $250,000 mortgage. You would make a monthly payment of $1,439.15. The monthly payment does not include taxes and insurance premiums. The actual payment amount will be greater. Payment assumes a loan to value of 60%. An interest rate of 6.25%, or 6.345% APR, is for the cost of points paid at closing on a $250,000 mortgage. You would make a monthly payment of $1,539.30. Your monthly payments does not include taxes and insurance premiums. The actual payment amount will be greater. The payment assumes a loan to value of 60%. So here is where I have all the counties in California based off of the AMI, Fannie Mae AMI tool with the 80%. Alameda County income limit is $56,800. Alpine is $76,080. Amador is $62,000. But one of the highest counties that I saw was Contra Costa of $106,880. But that's the Bay Area. But for the Fresno area, the AMI was $50,240. So that's where I got that information from. Is you have to go by your county, and then you have to look up the AMI. But then you have to consider that the interest rate changes daily. Now they're also going to increase the mortgage interest rate due to inflation. And so this changes daily, and you have to also do your own due diligence to check the interest rate. I also included a mortgage calculator for those individuals that were considering, looking for a home based on their county with the AMI or the income limits, where they would also have to determine your property tax, your mortgage insurance premiums, and your mortgage, your homeowner's insurance, because those are all going to be included in your, in your principal payment as well. But once again, my name is Marshawn Govan. I'm a mortgage loan officer. My NMLS ID number is 1370676. I'd love to work with anybody out there looking to buy a home, help you navigate through these obstacles, of course, and be your mortgage consultant. You can also text me at 559-500-6030, or you can send me an email to marshawngovan@rocketpro.com. I'd be more than happy to work with any client interested in pursuing home ownership. But this material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisor before engaging in any transactions. But thank you for taking the time to watch this webinar and learn about the first-time home buyers down payment assistance and some of the hurdles and obstacles that are faced with people trying to apply for the first mortgage program.